equity loan or the home equity line of credit. So you know you want to pull cash out of your property. You're just not sure the right way to do it. Should I use a home equity line of credit? Should I use a home equity loan? Or should I do a full cash out refinance? Let me give you a real quick overview of the differences between the three and how to decide which one to use. So first and foremost, a cash out refinance is your most expensive option, most expensive, but it's also your lowest interest rate because you're replacing your current mortgage with a new first mortgage. You're doing one loan, which means the bank is taking on less risk. If something happens and you can't afford to pay for your home and the bank has to foreclose, the first mortgage, the primary mortgage, can never lose all of what they're owed. Even if the value drops and the market tanks, they cannot lose 100% of what they're owed because the property is still worth something. Home equity loans and home equity lines of credit are considered second mortgages. Now, for a few of you, if you owe nothing on your property, you can take out a home equity loan or line of credit, and it's not a second mortgage. But for the most part, you're going to be doing a second loan. Now, the good news is it keeps your current mortgage the way it was. You don't have to change the interest rate. You don't pay anything in fee. You don't pay as much in fees. Your fees on doing a mortgage are in part tied to the size of the loan that you're doing. Well, if you're only taking out a portion of money, the new money that you need, your fees are based on that new money. If you're pulling out the new money and refinancing what you owe, then your fees are based on the total amount that you're borrowing, both old money and new money. So the fees on home equity lines of credit and home equity loans are way less expensive. In some cases, they're free. Now that comes from local banks who are offering their own money and saying, hey, we want to attract you or keep you as a client, as a consumer, as somebody who banks with us. So some banks will give you free home equity loans or lines of credit because you bank with them or they want to keep you banking with them, and they're loaning their own money. But they have pretty tight set of rules. They have very strict requirements of what they will allow and what they won't allow because they're loaning their own money. If you go to someone like me, I'm a mortgage bank. What that means is I don't have my own money in a vault that we're lending because all we do are mortgages. I don't bring in money from checking accounts and savings accounts and CDs that I turn around and lend back out. We are simply facilitating the financing and helping you get mortgage loans, whether there be full first mortgages or second mortgages, home equity lines of credit. So there are going to be fees when you work with a company like us, but we have more flexibility. We have different ways of proving your income. We'll go higher on your loan to value. That's a critical distinction because most full cash out refinances will only allow you to tap into 80% of the value of the home, including the fees you're having to pay. If you do a home equity loan or a home equity line of credit, you can often, with our company, I can take you to 90% of the value of your home. Now, in some ways, that's a super high risk. Like I'm loaning you 90% of what the house is worth, but it's about what are your needs. You don't have a lot of wiggle room. If the house goes down in value, you could be underwater. That is a scary, real proposition. But the reality is if you need the money, if you are a business owner looking to expand, and that's going to make you a significant amount of income by expanding your business, then it's worth tapping into that high of a percentage of the value of your home. But the rates and fees on any home equity loan or line of credit are higher than the rates on a cash out refinance. The fees are lower on home equity loans and lines of credit because they're smaller loan amounts. Even through a company like me, where we are going to charge you fees, they're significantly less because it's a smaller loan amount. So the decision about do I do a home equity loan line of credit, kind of calling that one thing, versus a cash out refinance comes down to how much do you owe on your first mortgage versus how much money do you need. It also comes down to what is the interest rate on your first mortgage and what would the interest rate be if you took out the money as a separate home equity loan or line of credit. And we really run the math and we say, okay, well, if right now you're paying $2,000 a month on your primary mortgage and taking out a second mortgage would add $1,000 a month, that's $3,000. But if you do it all as one brand new loan, your payment is $2,500. So in the short term, you can get a lower monthly payment, but you're also stretching everything back out to 30 years. Your current mortgage, the first mortgage, might only have 23 years left. Then your second would be for 30, but your first is paid off sooner. So there is a trade-off that I can help you evaluate what the right decision is. Finally, how do I choose between the home equity loan or the home equity line of credit? It depends. Most of the time, home equity loans are fixed rates. Most of the time, home equity lines of credit are variable rates. So you have to decide partially, what's my appetite for risk when it comes to rates changing, rates going up or rates going down. The second more important piece is, do I need to re-access the money regularly? Do I want the ability to use the money, pay it back, but have it available to use again and pay it back? Some people who are in the home flipping game, they buy homes, they fix them up, they sell them. They want to have access to a line of credit. They want to have it ready to write a check to buy a home and then do the work on the house, fix it up, put it on the market, sell it, pay back the line of credit, and then repeat again. In that case, you wouldn't want a home equity loan or a cash out refinance, because with a home equity loan or a cash out refinance, you start paying interest on the money immediately. With a home equity line, and once you pay it back, by the way, you are done. You can't get it again unless you redo a new loan with new fees. And if you do a home equity line of credit, you only pay for the money while you're using it. But just be careful, because as market conditions change, there's a clause in every home equity line of credit that says they don't have to keep the line of credit open. If you pay it off and then later on you go to borrow money again, they could say, nah, we don't think it's a good idea. We don't think it's a good risk. Now, that doesn't happen a lot, but it can happen. So be aware of that. So to recap, home equity lines of credit, home equity loans, and complete refinances have a lot to do with what is your current interest rate and how much do you owe on your first mortgage, what is the potential interest rate on a second mortgage versus how much money you need, and what are your plans on how quickly you're going to pay it back and potentially need it again. And I am interviewing to be the person to help guide you through this. So you'll see a QR code or a link down below where you can schedule an appointment with me to talk through these options. And also make sure to sign up for our Home Equity Digest. It's a monthly email free of charge. It explains to you every single month approximately what your home is worth, approximately where interest rates are, how much equity you've built, how much of your payment went to principal versus interest, and different scenarios you can utilize that equity to your benefit if you choose. It's a bank statement. It's an investment statement for the biggest wealth building asset that most of us own, and that is our home. So sign up for that free of charge. It's called our HomeBot system. It is our Home Equity Digest, and you can click the link down below, and we can take great care of you in sending that to you monthly free of charge. Thanks so much for listening, and have a wonderful day.